So guys, as I said, as I promised, today is the day we will continue the topic about trading with $100. So this is the part 2 of the previous video. So now let's discuss technical analysis. And so this type of analysis explores financial markets by interpreting historical price data and trading volumes. It is based on mathematical, as we spoke before, and statistical models that describe the general nature of price movements. And so, how to earn in the FX market? So wait for the signals from the basic indicators, have them confirmed by other tools, and open a trade in a direction of the forecast that you got. Don't run after the number of positions. With fewer trades, your trading system is more stable and more accurate. As for the tools, we have trend indicators, oscillators, leading indicators, reversal indicators, etc. Next, we have support and resistance patterns. There exist reversal and trend continuation patterns. The levels help identify the points at which price reversals can occur. So they are often used to place stop-loss orders too. Then we have Fibonacci ratios, which are a kind of psychological levels. Next one are graphic figures. For example, triangles, then the mouthful parallelograms, that's how they called, rays, and so on. So they help identify long-term trends. Then we have horizontal and vertical volumes. They help determine the periods of the biggest trading activity and the price areas where the most orders are executed. Next, the tools are type of charts such as candlestick, linear, Heikin-Ashi candles, Renko, tic-tac-toe, multi-timeframe analysis where trends are located on longer timeframe charts, but a trade is opened on a smaller timeframe chart. So some of those instruments are embedded into many trading platforms by default. But user indicators, scripts, and information dashboards for desktop platforms are downloaded and installed separately. For example, you can find many free indicators for MT4 and MT5 on the MetaQuotes site. Okay, next step number 3, deposit funds into a trading account. But attention, before making a deposit, you have to go through verification, providing ID and address proof. You may also need to verify your payment method to ensure your wallet or card is valid. Making a deposit using third-party, of course, third-party wallets, cards, etc., bank transfers is naturally prohibited. So you need to also pay attention to the following things, which are the minimum deposit requirements and withdrawal amount, operational fees, so can the broker pay maybe some of them back? Third, how fast will the money be deposited? And if you haven't found a convenient payment method, you can always get in touch with the support team via live chat, for example. They will probably find a transit payment system for you. Okay, step number 4, calculate the required margin and margin level. So with a leverage mechanism, you can borrow money from a Forex trader at no cost. For example, a trader will get $1,000 instead of $100 with 1 to 10 leverage, because of course 100 times 10 equals 1,000. And at the same time, you should observe risk management rules suggesting that the maximum margin in one trade mustn't exceed 3 to 5% of the deposit. So, margin trading rules are as follows. Leverage is the first and foremost used to reduce margin, not to build up a position. Building up a position using leverage will automatically increase a 1 point cost. For example, a 1 point price move in Euro USD trade of 1.01 lots will equal to 10 cents. That's a potential profit or loss. When we increase the trade volume 100 times, the 1 point cost will also increase 100 times, and a 1 point price move will equal to $10. So using leverage, traders risk build up positions too much and getting stopped out. Here's an example of the Euro USD again. As the calculator suggests, the pair's intraday volatility is 60 points. If we build up the trading volume to a round lot, the deposit will blow when the price corrects by 10 points. The key factor in a leverage trading is margin. So margin is an amount blocked by a broker at the opening of a trade. Without leverage, a broker blocks a full trade cost. With leverage, a broker only blocks a part of it. So, use the calculator to compute margin and a 1-point cost. Type in a trading asset, a trading volume, and trading leverage. So, let's calculate the margin again for the Microsoft stock. As shown in the screenshot, the margin for the minimum volume is $6.88. So you can basically automate all the process. Okay, next is step number 5. Select your trading strategy. So none of the trading strategies can guarantee 100% results. More or less, profit-making strategies don't exist either. Much depends on whether a strategy suits a trader's goals, temper, and skills. Someone can spend time trading currencies in front of a computer for hours, opening dozens of scalping trades. Someone enjoys high-risk strategies for cryptocurrencies. Someone likes reading economic news releases and exploiting fundamental moves. So, trading strategies for FX markets are as follows. First, we have scalping. Then we have high-frequency trading, where you open lots of trades and fix a few points of profit. Then we have intraday strategies, where you open and close trades within a day, saving on swap fees. Your options would be swing trading, trend strategies based on intraday volatility, and channel strategies. So, Forex swing trading within a channel or a momentum during breakouts. So the easiest to understand model is swing trading, which allows a profit from corrections. Then we have long-term strategies, which imply that a position is held in the market for long, unlike in swing trading. Then we have previously mentioned news trading, which is trading by use of fundamental analysis. Next one, algorithmic trading. This trading is by use of expert advisor. So, try a few on demo account to figure out when trading pace and trading strategy is the most suitable for you, because everybody is different and will receive the, for example, emotions from what they see on the screen differently. So, let's talk about the limitations of trading FX with $100. So firstly, when you trade with $100, your trading opportunities are of course limited. Then potential profit limits as well. According to risk management rules, an acceptable risk per trade is up to 5% of the deposit amount. So then we have maximum volume limit. Even using the maximum leverage, you won't be able to open a round lot trade. So then we have to limit on maximum number of trades. So the feature of trading different assets simultaneously and using a grid of orders and high-frequency advisors will be limited. The minimum deposit of $100 is good for bettering trading skills in a real account, but the received profits won't repay the time spent trading actively. An alternative solution will be investing $100 in stock market assets in the long term. According to statistics, S&P 500 indexes 10-year average profitability is around 10 to 12% per annum. Drawdowns as well must be considered. So, with compound interest, the deposit can increase 2.5 times up to $260. So now let's discuss some tips. So, first, start trading microlots. With the leverage used, you will have your trading volume increased. Then don't rush to increase your deposit as fast as possible. If you have a small account, increasing a deposit using a martingale strategy, averaging down, and pyramiding is not for you. Remember that. Then don't be afraid to lose money when you open your first trade. Everyone makes mistakes. Your goal is to gain experience in the real market. If trading strategy is tested in a demo account, turns out inefficient in real account, don't give up. You will gradually learn to quickly adapt trading strategies to market changes and to feel the market, we could say. If you lost $100, that was just a fee, we could say, for the lesson. If you made money in FX, you made another step toward professional trading. So don't be afraid of experiments. Still test all experimental ideas in the demo account first, and any trading strategy stops working over time. Remember also that. Use a demo account to readjust yours that started not working. So reset indicators and use new instrument, for example, new combinations. Then don't get overwhelmed. If you lose money, don't repeatedly top up your account hoping to reach a break-even level. Don't despair, make a pause, analyze your mistakes, and make money next time. Then set yourself a goal and break it down into measurable steps. For example, if you aim to double your deposit in 5 months, your deposit must grow by 20% monthly. So don't spend your last money to trade FX with $100. It should be a sum that you can afford to lose. Don't run after profits. Profit yielding trades and a gradual deposit increase is a success already. So now let's discuss some conclusion and key takeaways from this whole video. If you respect risk management rules, you can trade FX with $100 with leverage and minimum lots. So trading with $100 is best suited for acquiring trading experience in a real account and training your emotional stability. Still, it won't allow you to earn money to repay the time spent. Then, remember, demo account is an instrument to get acquainted with a trading platform, test strategies, and have practical lessons. It doesn't require a real deposit. Next point is that the technical and fundamental analysis are the main market analysis tools that allow making money in the Forex market. Combining primary and confirming signals increases their efficiency and the trading system's resistance to market changes. So, try to open trades in a demo account, and you will gradually learn to understand the principles of pricing, and you will do better and better over time. So believe in yourself, learn, analyze mistakes, make conclusions, and we can say you will rock. So that will be all, guys. I will end the video now. Thank you for watching. I hope you get something out of it, and I'll see you in the next one. Take care and goodbye.